Swayam Prabha. Digital India. Educated India.
Good afternoon, dear students. In this particular module, in this particular video lecture, we are basically concerned with the provisions of Income Tax Act 1961 relating to prosecution. As I have already told you in the previous video that basically the chapter is relating to penalties and prosecution, and we had discussed the first part, that is penalties, in the previous video, and in this particular video we will be concerned with prosecution. Now, once again, you should note that why penalties and prosecutions are there. I have already mentioned you once earlier also that penalties and prosecution is basically these are there when some offense is committed by the assessee. When one offense is there on the part of assessee, in that case penal provisions are there, penalties are there, and even prosecution is there. So these are there in order to you may say punish the assessee in some way. And as far as penalty is concerned, in that case monetary punishment was there. But as far as prosecution is concerned, so in this case it is much more than penalty. You may say it is much more than penalty, and in this case imprisonment, rigorous imprisonment is there, and it may you may say it may be with fine or it may be without fine. So kindly note. So we are discussing basically various provisions of prosecution, and main aim is to make the assessee more sincere, make the assessee more careful in dealing with such issues. In case some minor lapse is there, in that case some relaxation may also be given as far as penalties were concerned. But kindly note, when willfully assessee is doing something that is not acceptable at all, in that case, and when the you may say when the lapse is the quantum of lapse, you may say that it is very dangerous, it is not in the interest of the revenue. So in that case prosecution may also be there. And kindly note that these prosecution proceedings are in addition to other penal provisions, and be it penalty or be it prosecution, the main purpose of the Income Tax Department is to have effective enforcement of the act. So that is the main part, and various offences are there, and for various types of offences prosecution is there, and prosecution, the quantum of imprisonment, or it will differ, it will depend upon the type of offense. Prosecution will be depending upon the nature of offense being committed by the assessee. So I have already told you that it may be with the imprisonment may be there, and it may be with fine or it may be without fine. So let us start. First, you see under section 132 subsection 3, I think you might be aware that it deals with search and seizure. And let us suppose that some prohibitory order was issued. Under that, prohibitory orders were issued regarding assets, regarding books of accounts, or regarding other documents. But again, the assessee has, again the person in whose premises you may say the search and seizure was conducted, he has contravened he has not complied with the terms and conditions given in that prohibitory order, and he has taken it lightly, and he has not complied with that. Rather, he has contravened with the you may say terms of that order. In that case, as per the provisions of Section 275A, you may say prosecution is there, and it may lead to an imprisonment that may be up to 2 years along with fine. So it should be remembered. It should be remembered, and it is always advisable. It is always advisable that in case some prohibitory order has been issued by the competent authority, and in that case it becomes the duty of the assessee to abide by, to comply with terms and conditions mentioned in that order. Or otherwise, you are seeing the imprisonment may be there, and that may be up to 2 years, and even it may be along with fine. Now again, you see, while discussing search and seizure, we had made it clear that it is the duty of the assessee, it is the duty of the owner, or it is the duty of the person that was there when the search and seizure operations were conducted in you may say at any place, vessel, or as the thing may be. And authorized officer, we know that authorized officer in that case is empowered to ask for providing some facility to inspect books, to inspect documents, and various other matters. But in case the assessee has failed to comply with those directions, he has not complied with, he has not provided any facility to the authorized officer at that time, and in case it is proved, again in that case the prosecution provisions are there. It will be treated as an offense, and again the imprisonment may be up to 2 years, and that too along with fine. Then kindly note, we are discussing basically Section 276. Kindly note that in case assessee removes some property, or you may say assessee is assessee has concealed some property, you may say assessee has transferred some property, or some delivery of property is there, and the sole purpose is to save himself from tax recovery, to postpone, to thwart, you may say, tax recovery. In that case, again it will be treated as an offense. It is treated as an offense as per the provisions of Income Tax Act, and Section 276 in this case provides for the prosecution that may be the imprisonment may be up to 2 years, and that too along with fine. Again, in case some company is there, let us say some company is there, and in that case some specific provisions are applicable. In that case, some specific provisions of Section 178 subsection 1 and Section 178 subsection 3, these are applicable regarding company in liquidation. In case the person dealing with company in liquidation that fails in complying with these provisions, that person fails in complying with Section 178 subsection 1 and subsection 3. In that case, that person, that fellow would be prosecuted, and in that case the quantum of punishment is minimum imprisonment up to 6 months, unless special and adequate reason are given. In that case it may be relaxed, and maximum quantum of punishment, maximum quantum of imprisonment is that may be up to 2 years. So it should be noted. Again, we are now discussing Section 276B, Section 276B, and it deals with failure to pay tax to the credit of central government. Dear students, we have discussed on various occasions that government need, you may say government needs revenue, government need tax, because various developmental activities are to be, you may say, conducted, various, in order to carry on, in order to, you may say, for various developmental activities, government needs revenue, and taxation is the major source of revenue as far as central government is concerned. And when the tax is collected by someone, then it is the duty of that person to pay tax to the credit of the central government as per the norms within prescribed time period. And in case, let us assume, in case a person fails to pay to the credit of the central government, other TDS or the dividend distribution tax. Nowadays, from you may say from Finance Act to 2020, some changes are there in dividend distribution tax. Or in case he fails to deposit the tax in respect of winning from lotteries or crossword puzzle as per section 194B. In that case, the person so responsible, in that case, the person who was responsible and who had failed to pay the tax to the credit of central government, in that case, penalty, in that case, it is treated as an offense and he or she will be prosecuted. And the minimum, uh, you may say, minimum punishment is imprisonment, simple imprisonment up to 3 months with fine, and maximum quantum of imprisonment, maximum quantum of punishment is, it may extend up to 7 years, uh, and with fine. So it should be noted. So it is again, I am saying it is again advisable that the tax, once it has been collected, it must be deposited at the earliest with the central government. Again, when we are discussing section 276C, it deals with when some willful attempt, is there on the part of assessee, on the part of taxpayer, to evade tax or to evade penalty or to evade interest. In that case, what are the penal provisions? Let us discuss. What will be the punishment? So kindly note that imprisonment will be there. Imprisonment will be there, which will not be less than 6 months, but which may extend up to 7 years, and with fine. In case tax sought to be evaded exceeds rupees 20 lakhs, in case it is that the tax in question was more than 25 lakhs, in that case imprisonment may be there up to 6 months, and again it may extend to 7 years along with fine. But in case, kindly note that in case tax is being evaded or tax penalty, interest, some willful attempt is there and it is proved that it is there, but it is, you may say, less than rupees 25 lakhs. In that case, imprisonment will be, it will be treated as an offense as per the provisions of Income Tax Act. But in that case, imprisonment will be there, that shall not be less than 3 months, and which may extend up to 2 years, and that too with fine. That means fine may also be imposed in addition to imprisonment. Now, in case, again I am telling you, we had just discussed the provisions relating to TDS and DDT, dividend distribution tax, and winnings from lotteries. Now let us assume that tax has been collected, and again I am telling you, dear students, from 1st of October 2020, various changes have been there. Various changes have become applicable as far as TCS is concerned, as far as tax collected at source is concerned. So kindly note, when tax is collected by the seller, when tax is collected, and it is his or her duty to deposit it to the credit of the central government within prescribed time period. And again, in case delay is there, again it will be treated as an offense, and the imprisonment, the punishment will be, minimum quantum will be imprisonment of 3 months along with fine. And keeping in mind the quantum of, you may say, this offense, it may extend up to 7 years, and that too along with fine. So it should be noted that along with imprisonment, fine may also be imposed by the taxation authorities on the, you may say, SSC. Then, in case, kindly note the difference. In case books of accounts or documents are falsified, in order to induce a person to evade tax, to evade interest, in that it is also treated as an offense. And in this case, the minimum imprisonment would be up to 3 months along with fine, which may extend up to 2 years along with fine, keeping in mind the nature of offense and keeping in mind the, you may say, seriousness of the offense. Then, kindly note that once penalty is there, or once some prosecution is there, it is not so that assessee is treating it very lightly and he is making it as his or her habit. It should not be so. And in case it is found that a person was convicted under some section, maybe section 276B, 276 subsection 1, 276 double C, 276 double D, 276E, 277, 278. And once he was convicted, and he is again being convicted for same mistake, for same type of offense. In that case, what would be there? In that case, a minimum imprisonment may be up to 6 months. Minimum will be 6 months along with fine. And maximum imprisonment in that case, when such, you may say, such offense is repeated, then in that case maximum imprisonment may be up to 7 years, and that too along with fine. Again, you see, sometimes public servants are required to furnish some documents, some information, but that is not being, you may say, sent. That is not being submitted in the desired way, and you may say public servant is furnishing some information or some document that is in contravention of section 138. In that case, we are dealing with basically section 280A. In that case, imprisonment up to 6 months, and that too along with fine may be there, and it should be kept in mind. And one thing, my dear students, you should note that we are dealing now with section 270AA, and it deals with immunity from penalty and prosecution. Immunity from penalty and prosecution. So what is the procedure and what may be there? Kindly note that an application may be moved to the assessing officer by the assessee. Assessee may file an application. Assessee may file an application to the assessing officer for seeking, for granting. He may ask the assessing officer to grant immunity from imposition of penalty under section 270A, I have just told you, and initiation of proceedings under section 276. If, in case, kindly note, in case tax and interest payable, as per assessment or reassessment order is paid within the period specified in such notice of demand, and no appeal has been preferred against such assessment or reassessment order, in that case he may seek immunity from penalty and prosecution. And application in prescribed format should be made, and kindly note that it has been made by the assessee within 1 month from the end of the month of receipt of order. It is timely. It has been filed timely. And order under section 270AA shall be passed by a assessing officer after expiry of time allowed for filing of appeal before CIT appeals. That is after that time. But one thing you should be keeping in mind that in case panel proceedings, in case penalty proceedings have been initiated for misreporting of income, in that case you can't seek any immunity in that case. And one thing more you should be keeping in mind that in case this order is made, this order to accept or order to reject the application, it is to be made within a period of 1 month from the end of the month in which such application is received. Let us suppose application was received in the department on 21st of you may say August, and in that case what will be there? In that case, from the end of August, that is from 31st of August, within 1 month, that is you may say up to 30th of September, the it must be decided. Decided means it must be made clear whether the application has been accepted or it has been rejected. And one thing more is there. In case it is accepted, it is good. But in case it is rejected, so in that case, an opportunity of being heard must be given to the assessee, and he is free to give his you may say his details, his explanations in order to satisfy the assessing officer. And one thing more, my dear students, you should note that no appeal shall lie against assessment or reassessment order where application under section 277A has been accepted, and no appeal shall lie against that particular assessment or reassessment order. So it should be kept in mind. So that was all from my side as far as prosecution provisions are concerned, and I have tried my best to include a few significant provisions regarding these prosecution. So, okay, students, thank you. Thank you very much.